Hi everybody, thanks for clicking on this video. I just wanted to make a quick thing about what I think is happening with the Rolex prices. I do have a theory about what's going on. It may or may not be accurate. I don't know. They're just kind of my observations, so take it with a huge grain of salt. So what the hell does Japan have to do with Rolex prices falling? Well, Japan isn't the only reason why Rolex prices have come down. The Fed has been raising interest rates, inflation is seemingly out of control, there's an energy crisis in the US and in Europe, all in the midst of a looming recession. Oh, and the war in Ukraine. I understand these things, however, in addition to these factors, it is my theory that Japan has a unique impact on the watch market. It all boils down to a few factors, those being Japan's economy and foreign exchange, the pandemic, and an inflated watch market in our global environment. First, it's important to mention that Japan has a debt to GDP ratio of over 250%. That's amongst the highest in the entire world. Their economy has been stagnant for many decades, with little to no growth, and wages have largely remained flat. The reason why Japan has so much debt to begin with is because after the economy crashed in the 1990s, out of fear, banks stopped lending, as loose lending practices caused the asset bubble of the 90s in the first place. So, in an effort to stimulate the economy into growing again, and to bring the inflation rate to a healthy target, quantitative easing was implemented in the 2000s and the 2010s. Since 2016, the Bank of Japan has been using yield curve control to cap their government bond rates, for example, 0.25% on the 10-year. On February of this year, the Bank of Japan announced that they would buy unlimited amounts of bonds to maintain this. This meant low rates, massive money printing, and lots of bond and corporate stock buying. This was amplified by the pandemic, when printing and bond buying were supercharged. Now, this brings us to today, where Japan's debt has gotten so high relative to their GDP, they have to cap their historically low rates. This is in direct opposition to what central banks across the world have been doing. Now, because of this inflation crisis the US and Europe have been experiencing, markets are overheating and prices are getting out of control, so central banks are using the only device they have to cool things down, which is raising rates and tightening. This is happening at the same time that Japan cannot raise rates. And when there is a gap in the interest rates between Japan and other major economies, such as the US, the Japanese currency weakens. A weaker yen means imported items like oil and gas cost more. When energy costs increase, the prices of everyday products increases with them, and this puts pressure on the already low wage growth Japanese consumer, and ultimately the market. Beginning around the first week of March this year, you can see the value of the yen has basically fallen through the floor against the US dollar to the tune of over like 20% in the span of just a few months, to levels not really seen since in the past 20 years. This can also be said about the euro, which has tumbled to reach parity with the US dollar for the first time since 2002. Okay, so how in the world has Japan contributed to dragging down Rolex prices? Well, during the watch market boom over the past 2 or 3 years, Japanese flippers and sellers caught a huge break and have ridden the watch price train up to its peak, despite Japan's economic environment. But then, the inflation crisis hit, and the Fed began raising rates at the same time that the BOJ kept rates low, causing investors to dump BOJ bonds for US bonds. This triggers the Japanese yen to plummet against the US dollar. And when this happens, Japanese exports begin to become cheaper because of the differential in exchange. And in this case, the Japanese exports we are talking about are Rolex watches. Even if Japanese sellers aren't actually selling to anyone outside of Japan, because the watch market is global, this will contribute to pressure on the overall market, especially when you factor in Chrono 24. See, people browse Chrono 24 in their own countries, in their own currencies. So let's say it's March 1st, 2022, and someone in the US is looking for a Daytona, and he logs on to Chrono 24 and searches 116500, then hits sort by low to high. He'll be presented with Daytonas sorted from the lowest price to the highest price, not just inside the US, but globally. Unless he sets the search parameters to US only, of course, but Chrono defaults globally. Since that time, the yen has been consistently falling and bringing the price of that Daytona down with it, as each time the yen drops, the US dollar can essentially buy it for cheaper, regardless of the current market conditions domestically. Naturally, as a result, this will have some effects on the watch market, as you can imagine. Firstly, if a seller in the US is using Chrono 24 as a baseline or a reference point for their own pricing, or if a buyer is going to a seller but referencing Chrono 24 as part of their offer, automatically this price will be lower than it was at the beginning of March. Secondly, people will now start to notice prices are quote unquote falling, thinking there's something wrong with the Rolex market, and they'll rethink their purchase, thinking they may wait and see to see if prices come down even more. So this slows down sales and puts pressure on demand, and also puts pressure on sellers who are holding inventory. Thirdly, emotion. Movements in financial markets have a lot of human behavior built into them. When people start seeing their assets devalue, they will panic, and as a result panic sell for a less than market value. This is especially true for those who over-leverage themselves to buy these watches, and even more so for speculators who underestimated the potential for a correction in the market. Now, for financial reasons, they will be forced to sell, adding more pressure to prices. But to top it all off, because Japan's economy was weak to begin with, the domestic Japanese watch market cannot sustain the inflated watch prices from the crazy 2-year run-up. Most domestic buyers in Japan would have already made their purchases by this time, so the total addressable market alone is not big enough to maintain the high prices, let alone price appreciation. And since their border has been closed off for the past 2 years, they lose all those international watch buyers who would have traveled from China and the US to buy watches as tourists. So sellers in Japan have no choice but to lower their prices. This, combined with the weakening yen, will lower prices even more, triggering a spiral effect. Which brings us to our current situation. Now, again, this is just a theory. However, as you can see from these screenshots, the prices of, for example, a Daytona has basically traced the decline of the yen with a lag time of about 1 or 2 weeks. This would make sense, as the market would need this time to digest and react to the weakening yen. Is this just a coincidence? I don't know. But to further support this theory, here are some shots of some Rolex models on Chrono 24, and as you can see, the majority of the lower price examples are from Japan. So I guess the question is the Rolex market doomed? Will prices completely collapse? In my opinion, no, I don't think so. Rolex watches have been a store of value long before the recent boom in the watch market, and I suspect it will be for some time into the future. If Rolex wasn't an asset class already, I think it is now. The global population will just continue getting bigger. The money supply will keep expanding year after year. Upward mobility will spread in emerging economies. The potential market for Rolex in India and countries in Africa, Latin America, and Southeast Asia have barely been scratched, for example. Millions of new millionaires are created every year, and at some point, many of them will want to buy something expensive. And keep in mind that the forces that drove down the market are the same forces that can reverse and have an opposite effect. If and when things eventually return to normal, when inflation comes back down to 2 or 3%, I suspect the Fed will begin easing again. When market indicators like good corporate profits, healthy labor numbers, and strong consumer spending become evident, we'll once again see a risk on period. For the watch market, this means panic selling could become panic buying. And with any luck, the yen will catch a floor and start strengthening again. This will bring up those Chrono 24 prices as it will become more expensive to import from Japan. Also, given how much money is currently sitting on the sidelines, I don't know, we may see a massive bull run. Who knows? Now, I'm not saying this is going to happen soon. Seeing how badly we all hate each other these days and how no one can get along, it may take many months or years. I guess in the short term, Rolex could redirect some of that Japanese supply to China or the US, or raise the MSRP in Japan, but I'm not sure if that'll make any difference considering how systemic Japan's economic problems are. All I can say is, in the meantime, just wear your watches and enjoy them. Don't worry too much about the money. All markets go up and down. It's just the nature of things. And if you are in the watch market and you're looking for a Daytona or another Steel Sports Rolex, I think if you can somehow make your way to Japan, that you'll be able to score a really good deal. When Japan reopens their borders to tourists, I will most likely try to pick up one of these sub 30k ceramic Daytonas. Anyways, thanks for listening. It's highly likely that I have no idea what I'm talking about and all of this is a bunch of nonsense. But that's fine because I'm not exactly a smart person. But these are just my observations.